think a lot of people be curious about this. What was your toughest learning experience or before you got to the peak where you were confident enough to say, okay, I know how to play this game and I'm going to...
Right. Well, I mean, there's a couple of things. I mean, I know I'll give you two examples. One was right after I first started trading options in 73, then we went into a big bear market in 74. And I really consider that my first really serious market that I was really trading heavily. And so I probably have always had a slightly bearish bias since then. There's some theory that you have that bias for the first market that you ever really made good money in. And I was short that market all the way down with both synthetic puts, which is, in those days we didn't have put options. So you could short stock and buy calls. That's how you made it. Or short calls. And so I was short a lot of calls right at the absolute bottom, which, I knew the market was oversold, but it didn't look to me like it was really bottoming yet. And in fact, it was a double bottom eventually, but this huge rally sprung up out of nowhere, really because Jerry Ford had this big inflation conference and had these buttons that said "Whip inflation now." And it was a big, I don't know, it just caught the market's fancy or something. The thing ripped up like 11% in 4 days or something like that. So I got cleaned on that one pretty good. It went from like 580 to almost 700 in just like no time at all.
With your option leverage, that was more like what?
Well, I was short, so it wasn't the same amount of leverage as if you're, really long. But and I was trading as a private trader at that time. But as a professional, the biggest hit we ever took was in a blown deal, which I'm sure a lot of professionals have the same stories. But the biggest one is City Service, the gas company, oil company. They had accepted an all cash buyout from Gulf Oil, and everyone had tendered their shares. You were completely locked up. We were short the limit in puts. We had hundreds of thousands of shares of the stock, and Gulf Oil pulled out. And you couldn't get at your stock because they still had your stock. So the stock fell from 55 to 30 in overnight. So that was a pretty ugly one.
That's a lot of stuff to carry through. Okay, let's give the newer traders a little idea of what they should be looking for when they start coming into the markets and trying to get a little bit more out of options because their accounts are smaller, but they want to push it like, I guess, when you began trading.
Right. Well, obviously, in theory, you want, if you're just speculating, which is what, if you have a small account, it's about the only thing you can do, because if you try to sell uncovered options or, selling out of the money options is still a viable approach, especially put options. They're expensive on the indices and things like that, but that requires margin. So if you have a small account, you might not be able to do that. So then you're just limited really to buying options, which is, that's still a crazy game. We manage money for option traders for individual accounts, and, we'll put 80% or 90% into hedged conservative strategies and maybe 10% into speculation. And even there, you can get really hot or you can get really cold. It's a very, it's a tough, I think this last year has been especially tough in the market with a lot of stocks. The bear market, again, I did much better in that. Again, I got the bias, I guess.
Yeah.
But 08, the speculation made a lot of money. Last year, I found it much more difficult because things weren't following through. A lot of these things they would follow through for a while and then pull back and stop you out. We always use trailing stops on all of our trades, and I would suggest that a new person do that as well, because that's really the only way you can let your profits run and cut your losses. So you set a stop to begin with, and then you just use a 20-day moving average or something like that as a trailing stop and let your profits run.
Yeah, you were talking about that at the New York Expo. I remember that.
Right. Yeah, so, a small trader should find a system of analyzing stocks that you like. For me, I would definitely suggest technical analysis, not fundamental, because you're option trader, you're not going to be in the thing for a long term. You're kind of in and out. But if you have a reasonable amount of capital, I would suggest that you limit your speculative activities and you consider more spreading activities, something where you're selling options, at least doing some sort of sale of options. So you can, but then you have to still do your analysis. You can't just run around selling options all over the place.
Right. Last question. Something I just noticed about all three gurus, you, Price, Heatley, and Barry Hamsey, is all you guys started out programming things for options yourselves. So, with how rampant and how easy computers are to use today and all the charting software out there, do you see a problem with traders overdoing it? Or what would you suggest for them to get their trading skills in line before they go over the top with their computer stuff?
Right. Yeah. I mean, I always find that, as far as software goes, especially option software, you probably want to make sure that you're not overdoing it, because if you go out and buy the Cadillac software, like say Option View or something, you're probably not even going to read the user manual by the time your trial expires. It's just too. Start on something a little smaller, but you definitely do need the option model. It's not like you can't have software. You must have software. Option modeling is extremely important to success in option trading, and all the big players, even middle and small players, are using a model. So if you're trying to trade without the model, you're not going to have any success. You don't have to reinvent the wheel like maybe we did. We sort of, when I first coded up the Black-Scholes model, it didn't even talk about how to discount for dividends. You had to figure that out yourself. Now, of course, that's all built into things, But you want to make sure that you're using an accurate platform too. So with these new volatility options, for example, they price off the futures, not off the VIX itself. So that a lot of the modeling software does not take that into account. As a result, it's giving you wrong answers. So, you want to make sure you understand how your software works, and your broker probably giving you some free software, which is probably is enough to calculate deltas and implied volatilities and that sort of thing. And that's a good place to start.
Thank you, Larry, for spending some time with us. It was a hard time getting going, but we'll have Larry on again, hopefully some other time for Price Labs, and talk about Larry's famous book, Strategic Investments. Options as a Strategic Investment. So remember, no matter where you are in the world, you can see Larry present live at Three Gurus Trading Webinar as one of the three gurus, and it'll be on March 3rd, 2010. Any hints about what you'll be talking about at this one? A special presentation for people?
Basically, I'm going to be talking about how to use volatility to enhance your option trading. I mean, that's the title of it. We're going to be talking a lot about the volatility derivatives.
Jesse's on a vacation far away.
Thank you, Larry. Nice to see you again.
All right, Doug.
Okay. Good luck tonight.
All right, thanks.